All right, let's get started. You should be able to see the screen okay and hear my voice. The topic for today is short-term trading using FX futures. So first off, just so I can really gear this session towards, towards what's best for you and speed things along, how many people currently trade futures? Who trades futures already? I guess either like a yes or no would help. That's probably a better way to ask it. Okay, good. So quite a few no's. So we'll definitely spend some time here. Excellent. So, there's nothing, the spot market is what it is. And this is not meant to say that stocks, bonds, FX, spot FX, or anything else are not good vehicles to trade. It's just to open your eyes to futures, which is a really good way to trade. And as OneFX is saying, they're the only way. Yeah. So once people get a taste of futures and FX futures, they tend to get pretty hooked. And there's a number of reasons for that. So there's a lot of advantages to trading the futures, the FX futures. Remember, when you're trading, for example, the Euro spot and the Euro futures, it's the exact same Euro, right? There's not like this different market for Euros, okay? It's not, it's the same currency against the same US dollar, all right? So let's take a look. Before we dive into charts though, can you see the web page I just brought up, CME Group? Should be able to see that, okay. So CMEgroup.com is where most, if not all, the currencies you're going to trade are found. Now follow my steps here. I'm going to mouse over the trading tab. I'm going to go down to FX. I'm going to click on FX. And then you'll see some of the markets below. Now if I click on Euro FX futures, let's just start with that one. And then I'm going to go over to contract specs. So make sure you write down contract specs. Before you trade these, you need to understand what you're trading. Obviously, you need a futures account. You need to know what you're gonna, the big one is what are you gonna make or lose per point, per pip or tick. In futures, they don't call them pips, we call them ticks. But take a look. So the specs page for any of them, the Euro, the Yen, the Swiss, the Pound, the Aussie, the Canadian, is important. Some are the same, some are different. So contract size, you can see above here, 125,000 euros. That's a lot of money, right? So when you're trading just one of these, if you just buy one Euro futures contract, the size of that contract is 125,000 euros. That's pretty big. But you're going to be trading on a margin account, so you're not actually going to be, so that's not that big of a deal, okay? If you actually wanted to take, for example, like delivery on that if you're a bank and you need that 125,000 euros at a certain point in the future, well, you need to have an account that can cover that, right? So, but that's not important for us here. The important ones to look at, you got the four expiration months: March, June, September, December. The symbol for March is H. The symbol for June, M. September is U. And December is Z. Yeah, there is mini trading, but there's not a lot of volume there, DC, so you probably want to just trade these guys. But again, I'll show you more of that in a minute. Now, even though there's expiration months, these are, a lot of people think, oh, these are like options. No, they're really nothing like options, okay? So take a look down here. This is the other most important one right here. I'm going to highlight it. Minimum price increment, $12.50 per contract. And that's per 0.0001. So let me take you to the charts for a minute. What does that mean? This is the important one. Let's go over to the Euro. OneFX, sure, we can do that sometime. Okay, so everybody see how it's trading here, right? 113.15. Does everybody see that? when it goes from 15 to 16, so 113.15 to 113.16, there it just went down to 14, that's one tick. Each one of those is worth $12.50 to your account. So if you bought one at 14, 113.14, and it goes up to 113.15, you just made $12.50 for trading one. If it went down, you just lost $12.50 for trading one contract. So the $12.50 sounds like a small number, but you can see that it can add up pretty quick, even if you're just trading a one lot, right? Because this market can really move, number one. Number two, you're trading two, now you're at $25 a tick. 10 ticks is like nothing. Does everybody understand that? Now the euro is $12.50 a tick. So is the yen, so is the Swiss. When you get to markets like the Canadian and the Aussie, they're $10 a tick. But you can find all this information right here, minimum price increment on the CME website. Okay. This market does have a short close, and you can find all that right down here. The only reason there's a short close, you can see it's right here, okay, is so that they can settle the accounts, all right? So you have end of day settlement, which is nice, really nice. You don't have that in a lot of other markets. Anyway, I don't know that there's a whole lot more to go over on this page. What I mainly want to do is show you how to get there. So again, it's trading, go to FX, pick the market, and then make sure you go over to contract specs. That's the key right here. You can see the margins over here, and they're, okay. So if I just download that data for the, oh, I'm sorry, here. Okay, so there's the margin. Let's see. It's all right here. All right, so just pick exchange, asset, and the products. So that's EC Euro futures. Oh, I want to go back here one more time. The other thing you're going to really need to know is the symbol. Very easy, but it's found here. So under ticker symbol. Okay. So obviously the euro is EC. For yen, it's JY. It's really simple. Swiss franc, SF. British pound, BP. Guess what Canadian dollar is? CD. All right? So very simple. I'm just kidding. But does everybody understand this? Again, just keep it real simple. You can find all this information here. And let's go back to the charts. When we're short-term trading these markets, it's always important to know where things are at in the big picture. But what's really nice about trading the FX futures, what can you use here that you can't use when you're trading spot? What's available to us here? And yeah, volume. Not only is volume, so I can put volume on the bottom of the chart. That's pretty simple. But look what else I can do here. I know some of you know this, but I can create a volume chart. Look at this. So look at this chart. Okay, I love volume charts. And you can look at open interest, correct, Mark? Yeah, so open interest is key. And so is volume and volume chart. So I can create a volume chart. So if you look, everybody see the times at the bottom of the chart? See, they don't make any sense, right? 8:58, 9:03, 9:10. There's no rhyme or reason for them. That's because I've just eliminated time from the equation. These candlesticks now are not built with time factored in. They're built on volume. So I chose 100. So every time 100 contracts trades, you're going to see a candle open and close. While that candle is, when they consider a new candle just opened, now there's, trading is taking place. And once the volume in this candle reaches 100, you'll get a close. But during that time, you'll see the candle move around. Right. Now, it's a little after 10 a.m. in the morning here in Chicago. I'm in Chicago. home of the CME. So this is a pretty dead time for this market to trade. You know, there's always you know, something going on, but this is not some of the more active times of the day. I could create, you know, bigger volume charts. But you spend a couple days looking at volume charts. They're you know, pretty neat. Okay, so you can see in this chart, there's a bunch of demand levels, you know, worked great. Some supply, you'll see probably, I'm sure if I scroll back. I can cruise over to the yen. We can take a look at the yen. There's yen. I could do the same thing here. Well, you need to understand, if you do get into creating volume charts, it's going to be different for all these because of the volume of the market. So where 100 may work in the euro, if I go over, for example, to the Canadian dollar, where the volume is going to be much less, it's going to take longer for that same volume chart kind of to open and close. Okay. And again, I'm not saying you need to use volume charts. You can. You don't have to. So let's go back to the euro for a minute. I don't see a lot of questions. So either you're totally getting it and very interested, or you're bored out of your mind. But don't answer that. No, I'm kidding. Okay, let me go to. Let me build some more charts here for you. Yeah, thanks, Mark. Yeah, no, there's definitely more than one way to do it. That's good stuff. So I want to create. I just want to go over with a couple more charts here. I kind of want to keep that. Let's do this. So you don't really need a lot of charts. You know, I would say, you know, I have way too many on the screen. You don't need that many. But let me just move these over here. Hang on a second. So I'm going to kind of put three charts next to each other. Again, today we're focused on short-term trading these markets, but I love long-term trading these markets as well. So they're fantastic. Okay, let's make this one a 60-minute chart over there. Let's move these over a little bit so I get some more room and have an easier time changing the symbol. Yeah, yeah. So that's kind of another way of looking at those volume type charts. I built that a while back. Okay. Boyke, it's going to be different everywhere, but you know, TradeStation, you can open up a futures account with with $5,000. But there's plenty of other futures brokers that you can open up an account with, you know, $2,500. There's plenty. 25K, William, that's to trade stocks. So you can open a futures account with a very, very small account for minimums. Okay, let me just scrunch these charts up a little bit. All right, let's go to a completely different market. How about the Aussie dollar? Because the euro's just kind of sitting here sideways. Most of these are not going to look that different, but there we go. So we'll let this volume chart pop up. Now the volume chart is always going to take a little bit longer to load. Now, because the Aussie has much less volume, I'm going to bring that volume chart down quite a bit. I'm also going to give the chart more room, scrunch the data a bit. It's not going to help us at the moment, but you know, one of the things I want to share with you, though, you see how, again, what you're really looking at now. For example, you take a look at the 15-minute chart. I love the FX futures. This is where I started my career. So I was trading Forex futures 20 something years ago, for a long time before I even thought about trading anything else. And I primarily traded the yen, not much more. BP, we can go to BP in a minute. So we've got a nice supply zone up there on a small time frame. Okay, let me change this up a little bit. And we'll actually do this. So it's going to take a little time to get this data. And let me make this a little bit bigger so that'll help. Okay. Oh, no, it's pending data. Okay. There we go. So I want to blow this one up here a little bit. So you'll see it's subtle, and I know for a lot of you, this is your first time looking at this. Yeah, Boyke, spot long term or the futures long term are fine. Just make sure it's obviously with the right broker. But yeah, the futures for longer term trading, outstanding. So it's subtle, and it may take you a little time, but if you look at just about every turn in price that you'll find in any of these markets we'll go to, you'll see on these small time frame charts and volume charts, there's a reason why prices turn where they do. Okay. I'm just highlighting them. I'll just do this real quick. I won't do all of them, but okay, it's subtle, but there's always a level right there. Okay. All right, the way, if I extend these lines over, you'll see, all of them, even during this downtrend, notice every leg down started with a rally into a supply level, rally into a supply level, rally into a supply level, every single one of them. Just like, now, if we're moving higher, there's some fresh levels below, especially ones like that. You'll never see these by looking at, a different chart. Okay. Sound should be okay. I see there's a little challenge with sound for someone, but there's a fresh level sitting just below. And of course, this drop-based rally below that. But anyway, I think you get the point. So there's always, it's all about what I'm saying. It can't really be any other way, right? It's all about the orders. It's not, this is all trading. It's just a numbers game. It's all about the supply-demand equation at each price point. Sorry about that. Okay. So again, I don't want to take too much time here. We do have a fresh level sitting down there below. And you actually have another level that's just created just above. Okay. So see this little thing right here? Anyway. So price comes down to this area again, or this area below. So just another way of looking at this stuff. Someone said the pound is moving, so let's go over to the pound. Oh, Mark, those lines, those lines I drew, the bottom ones are fresh levels. The rest are levels that hit already. I just wanted to show you how, it's really nice looking at the actual, volume of not volume on the bottom of a chart, so to speak, but just another way of looking at it. You can look at volume charts. You don't need the volume chart. You can look at a small time frame chart, get a very similar picture. But these are just some things you can do that you just, you obviously can't do in the spot market. It's, fine either way. So here's the pound moving lower. Okay. We do have some supply sitting just above here in case we do get a retracement. Let's just make sure we get that in. And again, you're looking at a volume chart here on the left. So see how this little level here, doesn't show up on, obviously these are bigger time frames over here. Supply levels, let's see. You're saying on that rally earlier in the day. So again, on the bigger time frames here, we didn't have any real supply up there, right? This green bar happens because there's really nothing to stop it. Inside here you do, on a smaller time frame. And now it's moving lower because there's no demand yet. Okay? We're down to a 15-minute chart here. There's no demand. But let's go to let's look on this time frame. Let's look on the shear bar chart and see what we can find. Let me blow this up. So let's put a horizontal line in. Now we're looking at a really, really small window of, and so we've got this here. That's not quality demand. Let's see if we've got anything else over here to the left. So yeah, maybe down in here. You can probably watch for this. This area down here, right around 152.27. So we're not there yet. We've got some levels sitting above. Okay. And let's look at the, and the pound, this is what I want to tell you. So the pound trades in half ticks also, or is priced that way. So the pound would be $6.25. But even though that number is so small, or seems small, remember this market really moves. So don't get, be careful with that. Mark, no, not on momentum at all. Momentum is not something we focus on. It's where the turning points are, where the supply and demand zones are. So if price rallied to one of our fresh supply zones, we look to sell short down to that demand, which I think is around 27. Let's go over to another market. I want to be able to mark some things out here. And so here's the yen, which is $12.50 a tick. I want to blow this chart up and look to the left. Let's do that. I don't know if we're going to, let's see though. Oh, we're not going to get anything for a while. So if you look at the yen, the other thing that's nice, you see these levels like I'm showing here? Hardly anybody sees these levels. Remember, this trading is all about competition, right? So once you know what you're doing, it's nice to find levels that other people don't see. And levels like this, other people just don't see. That level is just 2 ticks wide, so maybe add a tick, maybe even 2 for the stop. You're still you're still talking minor risk and a minor stop. The Canadian is $10. The Canadian and Aussie are $10 a tick. So I'll run through this process here from start to finish in a second. So the charts come up. There they are. All right, so there's the Canadian. Remember, this one's $10 a tick. Okay, so if we look at the, say, the 50 share chart here, yeah, we're not talking, so Mark, when I talk about levels, I'm not talking about technical analysis. I'm talking about, supply and demand, the actual orders. So any of the fundamentals that influence price, obviously are baked into the price. So we want to know where are the willing buyers and where are the willing sellers. Specifically, where are banks buying and where are banks selling. Obviously today we're focusing on short term. We can move to some long term stuff too in just a minute here. In fact, we should probably do that. That's what we normally do. I just wanted to give you a taste of, if you're going to do some short term trading and you really want to have appropriate stops, the futures are a good alternative. So that's the whole point of what I wanted to get across to you today. One other thing that's important to understand is, one of the things that's important to understand is, how what happens to your orders when they come into this market. So it's not like the broker is creating a spread here. Your order goes through the Globex system at a central exchange, the Chicago Mercantile Exchange. It's called the Globex system. So it's an electronic order matching system, which is nice, and that's why you're able to get those tighter, tighter spreads and tighter stops. Okay. Yeah. So chemo, and anybody else who's new to these sessions, make sure if you have some time, watch some of the webinars that I've done. There's tons. I don't even know how many. There may even be 100 on there, all around the whole supply-demand concept. So the strategy that we employ here, helps quantify the supply-demand equation, and specifically looking for price levels where there's a big supply-demand imbalance. I started my career on the floor of the Chicago Mercantile Exchange on the bank side of the business, right? The institution side of the business. So what I did was train my eye to see, where banks are buying and selling in the market, so we can buy and sell there also. I think I started with this chart of gold, which is another futures market, and you'll see over time how this works out, right? What is that picture that represents where banks are buying and selling? It's completely not conventional technical analysis. You'll never hear me go over, indicators, oscillators, or any chart patterns, or, any of that stuff. Okay. So, for example, if you take a look here, here's the, where is it here? Here's what I think last time we were together, we were over this gold trade, right? Or the gold market. Again, we're very bearish, looking for price to come down to closer to this $1,000 mark. And the chart clearly told us that banks, institutions, central banks were heavy sellers of gold at 1,300. Okay, so yeah, I wouldn't watch all the webinars. I'd watch like 2 or 3, and just make sure you get the basics. Okay. Yeah, so here's it's funny because I left the 50 volume chart up here, and which actually isn't that, that's I guess it's not too bad for gold, but you do have this little area down here. Again, if anybody took this, make sure you know what you're getting into in gold. I love the gold market. I trade gold a lot, but remember this one's $100 a point. It's a $100 price point, and this thing really moves. Okay. If we let's go to the euro, look at some bigger time frames here. While we're waiting for those charts, I want to take you back to the CME website for a minute. If you go to trading, now we just focused on FX, but you can go to these are all futures markets. Here's interest rates. So here's the 10-year note, which is a great market to trade, and the 30-year. You got your energies over here, and your metals over here, which are great. Gold and all the others are found here. Crude oil and some of those markets are found here. Again, you don't need to be, and you probably don't want to be, an expert in the fundamentals in any of these markets. It's probably better that you're not, because that will, if you focus too much on making decisions based on fundamentals, you're going to be buying when things are good and selling when things are bad, and that's the opposite of how you make money, buying and selling anything, right? You need to buy when prices are down and sell when prices are up. Agriculture and equities index. So here's your S&P and NASDAQ right here. Again, you would just click on any of these, pick the market you want to look at, and then go to contract specs. Here's our larger time frame euro. So I know we were together last time. We found a demand zone where the chart told us banks are buying. So let's just go back to that so we can see it. Okay, remember that's that level right here. And then remember we went down to a smaller time frame and looked inside that level. Let's do that here. Actually, let's do that on a smaller time frame. Would be better. Okay, so that demand zone held up well. We're just waiting for prices to come back down to it for a longer term opportunity. And then there's certainly plenty of supply levels above to short the euro too. But we have to wait till we get about 1180. So let me blow this chart up, and we'll go take a look at that demand zone. What I'm going to do, remember our steps to doing this, we start with current price, look below current price to find the nearest fresh demand zone below current price. When I scroll left, and close. So there's that level. So we did put these in. Remember, we went over these levels last time we were together. Almost got down to this guy right here. So remember these price points. You can see them over here. These are key demand zones below current price in the euro. And we actually got very close to this one. So if you look at the low of the last couple weeks, we would want this market to trade just below that, and you'll be into these demand zones. So this one starts right around this level right here. Now watch, if I scroll over, so you've got this low right here of, right, 111.02 or whatever it is, 111.02. So we would want to see prices go below that level, okay? All right, so watch for that. And that can happen pretty quick. It looks like we're pretty far from there, but we're really not that far. And in the smaller time frames, again, there's plenty of supply levels that we'd look to short at above, but if we drop down below this low, it sets up a nice bear trap, a really, really classic bear trap. And that's because, if you take out this low from the January, 23rd or just after, if you take out this low, does that set up bullish or bearish expectations for people? Yeah, bearish, right? Price takes out that low. Everyone thinks it's bearish and should now short. Their prices are going lower. We've got a breakout to the downside. But what's nice is that's going to happen right into a demand zone. Okay? All right. So watch for that. That's a pretty good opportunity there for the euro. If we look at the dollar, you're going to see right here. Here's the pretty amazing level sitting just above. But we're not close to that at the moment. So the dollar trades up to this level here. Euro comes down into that level below. I think you can kind of see the perfect storm hitting there, right? That should actually be right there. So you're right at 96. Okay? But you need to get out to these levels, and we haven't been there. So Mark, remember, all of our talk here has been the reason why the euro is falling because there is no demand below. Remember, the whole point with the euro, we've been very bearish to Europe. You guys remember our big short was 137, which was a while ago. And the reason why prices have fallen as they have, there hasn't been demand below. right? At least no fresh, certainly no fresh demand. And again, if you're new to the sessions, when we say supply and demand, it's completely different than the words support resistance. Right? Yeah, the weekly chart, Mark, is what we've been pointing to. So, in fact, if we go get specifically, the reason why we're so excited at 137 is because, you know, if you look below at all this price action here, none of this is demand. We would never expect prices to turn at any of these levels. In fact, you know, we were talking about that the whole time. Is that, you know, we expect the opposite because there just is no demand. And the whole thing with the euro was, it wasn't like there was just this amazing supply above. There was some nice supply levels. So 137 was nice. There were a couple others. The main point is, the main point is, yeah, these pivot lows, those are not demand. In fact, when you see that, you expect price to go right through that. I guess they did kind of go right through it. Okay. Here we hesitated a little bit, and you actually did get a little bit of a rally, but not much. But again, even that, when you look on a smaller time frame, that's not a demand zone. You know, you had, and the key for us, remember, was this. That and this tells you, you know, prices are very likely to go below those levels. This is not, see, the difference is the trading books call the price action in those circles support. And they call it strong support because, you know, it looks like that area's been tested a few times. The reality is when price comes down there, each time, what's really happening is the buy orders there are being filled. So the hammer is chiseling away at the floor. Therefore, we don't expect price to even hesitate at those levels. We expect price to go right through, whereas, you know, the trading books say the opposite. That's where prices should turn. And it's really just all a conversation about orders. You know, what is the picture of buy orders and sell orders, really? Okay? That makes sense? Yeah, the difference between spot and futures, that's a good question. So, you know, one, you have a central exchange. The futures, you have a central exchange. The spot, you don't. Okay. There's more regulation over the last few years has gotten much better in the spot market, but still the futures market is very heavily regulated and has been. And remember, you know, the central exchange being the CME, that's a publicly traded company here in the United States, and which means there's kind of, you know, double regulation there, or not regulation, just oversight, if that makes sense. The other one is your orders. So when you place an order, it goes right into the Globex system. And, you know, the S&P and NASDAQ, when you're trading the S&P and NASDAQ, you're also trading through the Globex system. Okay, so when you're trading say the euro or the yen or the Swiss or any of those against you're trading, those are going to the Globex system the same way. They're getting matched up the same way as the S&P and NASDAQ orders do. All right. Yeah, Mark. No one's suggesting that if I read your question right, that you know 10 years ago it's the same person sitting there with the same order, right? No one's suggesting that. But the chart is telling you that is where the supply and demand is. Okay. So and if you think back, so for those of you that, you know, I know some people with us here today have been with us for, you know, been doing these webinars with me for many years. You know, we've thinking of some of the big ones like the pound and all the major moves in the dollar. Those are from levels from years ago. My point is, those are some of our best levels. Okay. Anyway, but good stuff. I know we're kind of out. I actually have to. I don't know if we end the sessions in the quarter 2, but I have another session coming up. That's just never happened before, so I do have to end this session just a couple minutes early, if that's okay. I apologize for that, but I know we've got other sessions coming up, and I wanted to make sure you got a really good taste of the futures. That was my main goal today. Let's see here. Yeah, I want to make sure that you got a solid understanding of the futures. There's my email address, seiden@tradingacademy.com. If you have any questions, remember, when you move to a different market, or at least try a different market, you need to know what you're doing. So be careful. Always think of the risks first. Make sure you've got all your bases covered. And again, if you have any questions, just ask. Again, spot forex is great, and this is just another way to, it never hurt learning more about this stuff, right? I love to learn about it too. All right, have a great day, everyone. Thanks for your time, and I hope that was helpful.